I don't think you would think of me as an entrepreneur. If you look at my background, I ran Smith Barney, I ran Merrill Lynch, I was CFO of Citi. I sort of prided myself on running big, complex, complicated companies and on turning them around. But instead of sort of seeing myself in that way, the way I've sort of seen myself as someone who tries to make an impact on the world around me, that I try to, I don't know, make the world a better place, but really have an impact on clients. So this started, if we can go back to when I was fewer wrinkles here, nothing going on here, no cough, young, and I had spent my career as an investment banker at Salomon Brothers. I hated it. I hated everything about being an investment banker. So I did something I would advise no young woman to do, which is that when I became pregnant with my son, I quit my job to stay home. And very quickly recognized this was neither good for me, not good for my husband, certainly not good for our baby, and wanted to get back into work. I couldn't figure out what I wanted to do. I spent a lot of time, what did I like about investment banking? What did I dislike about investment banking? And then when I felt like I was super old, 29 years and 11 months, my life almost being over when I hit 30, I had an insight that so many young women have, which is that I wanted to be an equity research analyst. So I went out and started interviewing in order to become an equity research analyst, and I was turned down by, I think, every firm on Wall Street. I was turned down by Salomon Brothers, by DLJ, by Goldman Sachs, by Credit Suisse, by Deutsche Bank, by First Boston, by Dillon Reed. I was turned down by the director of research at Smith Barney. The feedback that came back to me was that he didn't think, as a new mother, I would work hard enough. I reminded him of that when he worked for me and I fired him later. I was turned down by Morgan Stanley because I had a baby at home. But anyway, I finally found a job, and it was this sort of quirky, odd, what I used to call land of the misfit toys, Sanford Bernstein, a research operation. And so I'm going to take you back to then, when I was a new analyst, and I was about to publish my very, very first piece of research. It was on a company called American General. It was a life insurance company. I knew nothing about life insurance. And it was working to get into the lending business, what we now call the subprime business, but didn't at the time. And I looked at this, and I did what all good business school graduates would do, which is I dug into the numbers, I dug into the analysis, and I thought I saw when a subprime business that was growing very quickly, that when I disaggregated the credit ratios, right, because you had a numerator-denominator issue, you were growing the loans quickly, but I thought I saw in the numerator that there was some deterioration, masked by the growth of the business. So I disaggregated, I did the analysis, and I said, you know what, this business is going like this in terms of credit. So I wrote up the report, I sent it to the head of investor relations, who, by the way, happened to be from Charleston, South Carolina, which is where I'm from, so we were buddies. And I sent it to him. I titled it Whoa Nelly, and I asked him to review it for me. He took a look, and he called me. I'll never forget, I was actually on my first big girl business trip. My husband was there with me, and we were driving along in California, and he called me, and picked up my cell phone, which was this big at the time, and I had my computer, which was the size of a mini computer, on my lap, and this gentleman said to me, Sally, you're about to make a big mistake. And I said, why? And he said, well, first of all, this research report is negative. I said, yes, I know. And he said, it's wrong. The analysis is incorrect. You're brand new to this. The other research analysts have been covering the industry for years, decades. None of them see this. And by the way, even if you weren't correct, you're going to tank your career. Don't be negative. And I cast back to one of those informational interviews you do when all you really want is the job. You're just pretending to have an informational interview with somebody that I'd had with a research analyst, actually at Lehman Brothers. And she had said, let me give you some good advice. When you're a research analyst, you make one of two broad recommendations, buy or sell, right, positive or negative, and then you're either right or you're wrong. So think of a 2-by-2 matrix. And if you buy, you have a buy recommendation, and you're right, you're a hero. Markets are net long, we're Americans, we're optimists, everybody makes money, you're a hero. Buy, and you're wrong, happens to all of us, I own the stock too, better luck next time, let's have a beer. Sell, and you're right, grudging respect. Sell, and you're wrong, you're fired. And so I'm sitting in this car, I begin to sweat from pores I don't even know I've got. And thinking to myself, I don't want to lose my job. This is my first piece of research I'm going to publish. I don't want to lose my job before I start. And this gentleman, my friend from Charleston, says to me, let me give you some great advice. Research, Wall Street, is the only business in the world where you can make millions of dollars a year by staying in the pack. Why would you want to stick out? So remember, I was brand new. I didn't know my research was right, and what do you think I did? I published the research. I published every last word. Now, why? Well, one reason is because I recently, finally, after all these years, took a business personality test. And I am disagreeable. Which my husband is like, yes, you are. Nobody needed a test to tell you that. You tell me not to do something, I do it. And I also did it because I sat there in that car sweating with that, hanging up that big phone. And I thought to myself, why am I in this business? Am I in this business to make millions? That would be nice. Am I in this business for the investor relations guy from American General to like me? That's nice. No. I went into this business because I wanted to give advice to investors who invest on behalf of the families of this country. And if those families who are trying to put their kids in college, and if they don't like the advice I'm giving, it's still, I think, my responsibility to give them the best advice that I possibly can. Put that research report out, kept the title Whoa Nelly, and would you believe it, that when they reported earnings about a month later, about 5 or 6 weeks later, not only were the results deteriorating, they, of course, were deteriorating even more than I had expected, even more than I had forecast. So I kept my job, I got grudging respect. The thing that I didn't know at the time, but the issue that really changed, is that research analysts were beginning to give out research recommendations tainted by investment banking. The entire industry was being too optimistic. And just a few years later, Eliot Spitzer came in, revealed that while analysts were being positive to the public, they were being negative in their emails. I'm recommending it, but it's a POS. And the great news is, for me, my career went like that. So I got to run Smith Barney, I got to run Merrill, I got to be CFO of Citi. And here I am today as an entrepreneur. So another quick story about why that happened. I'm standing in my bathroom one morning, out of the shower, putting on mascara, and that's where you get your great ideas, right? You got a little bit of time, you're coating the eyelashes, you know, you have to let it dry, you need multiple coats, got to separate, because sometimes they clump. And it hit me that the retirement savings crisis in this country, something we're all thinking about while applying mascara, that the retirement savings crisis in the country, that crisis that is so big, $13 trillion in size, the solutions for which are so ugly, right, tax increases, entitlement cuts, that we've actually stopped thinking about it or looking for solutions to it, kicking the can down the road. It struck me as I was putting on mascara that morning that the retirement savings crisis in this country is actually a woman's crisis. We women live 6 to 8 years longer than you men do. We women are 80% of nursing home residents. We women retire with 2/3 of your money. Oh man, I thought, this changes everything. And as I began to work on my second eye, it struck me that the solutions become, instead of tax increases and entitlement cuts, they become about closing the gender pay gap. Do you know if you close the gender pay gap in this country, you close the retirement savings gap by 1/3, and you do it while growing the economy. More money in women's pockets, more money for their families, more purchases, more 401k contributions, more Social Security contributions. It can be about mandated parental leaves. Oh, those expensive, needy women with their babies wanting a parental leave. Well, we're the only developed country in the world that doesn't have one. And did you know that these pay for themselves in the first year? Because if you give a woman, or a man, but if you give a woman a leave after she has a child, she's more likely to return to work. You don't have to replace her. And the final one, and this is what's led me to my new business, Ellevest, is closing the gender investing gap. The gender investing gap, what's that? Women invest to a lesser degree than men do. For some of us, it cost us more money over the course of our lives than the gender pay gap. It cost the women in this audience tens of thousands, for this audience, hundreds of thousands or millions of dollars over the course of our lives. So I thought, I was probably putting on my lipstick by this point. I thought, geez, having run Merrill, Lynch, and Smith Barney, we got to do something about this. We've got to close the gender investing gap. I began to do research and discovered that it's not that women don't have money. We control $5 trillion. It's not that we don't manage it on our own. 90% of us manage it on our own at some point in our lives. And I began to dig. It's actually not that we don't invest to a lesser degree because we're bad at math. Not true. Women are as good at math as men are. It's not because we're not good investors. That's another myth. Not true. We actually are better investors than men at the hedge fund level, mutual fund level, and individual investor level. It's not that we're too risk averse. I discovered we're risk aware. We want to understand our downside risk. It's not that we need more hand holding, which I've heard. It's that we actually won't invest through jargon, and so ask more questions when jargon is thrown at us. The other one I hear, we don't invest because we need more financial education. A real red herring. Everybody needs more financial education, but men invest through it and women don't. What is the case is that the industry, my old industry, the investing industry, as I began to dig, is by men, for men. The financial advisors who used to work for me are 86% male. I should pause here. I love men. I've been married to a couple of them. I think they're amazing. And this isn't about excluding men, it's about including women. The average financial advisor is in his late 50s. I was at one firm not so long ago. They have more financial advisors over the age of 80 than under the age of 30. It's an aging population. Men leave their financial advisor at a rate of less than 2% a year. Women leave that same financial advisor in the year after their husband's death at a rate of greater than 80%. The industry, the maleness of it, expresses itself in war analogies, sports analogies, beat the market, outperform, pick the winners, jargon, the desire to win. CNBC is NFL Today, and the industry symbol is a bull. It's a phallic symbol. Not a single woman has ever said to me, I look at the bull and that brand just speaks to me. I'm just thinking, gosh, it just feels like me. And indeed, you look at the websites, and none of them look like the websites that we women spend time on. So I began to think this through. Now, I know what some of you are thinking, because I thought this too. I thought to myself, I don't want to do this, because I don't want to have to dumb it down. I don't have to do remedial financial education. I don't know, I don't want to pink it and shrink it. And then realized that this was my own gender bias coming through. That thinking about a female thing, we have been conditioned to think of it as dumber and softer than that. Anyway, I went through all this, and I thought, I'm not going to do this. So I went to a couple of the big firms Said, here's the insight, here's the work. I'm happy to consult, I'm happy to do it for free. And had breakfast with one CEO, big company, youngish guy, and finished the breakfast. And $5 trillion, 90% of us managed on our own at some point in our lives. And this gentleman said, that is so interesting, Sallie. He peered off into the middle distance. But don't their husbands manage their money for them? And at that point, I realized whether I'm an entrepreneur or not, that I needed to found Ellevest. Ellevest is a digital investment platform for women. We have done hundreds and hundreds of hours of research with women, asking them, not how can we market to you, but how can we better serve you? And it's been fascinating. We've co-created this with them. In fact, as I was looking at my iPhone before coming up here, I reach out to every woman who signs up for it. And I'm getting tens and tens of emails a day, tens of paragraphs, 6, 8, 10 paragraphs of feedback, reactions, responses. And what we're doing is we're trying to put investing on its head. Not a single woman we've spoken to said, I want to go to a site and then I want to choose a mutual fund versus an ETF. What women have told us, I want to go to a site, I want to give you information about me, I want to tell you what I want to achieve in life, build a business, have a family, buy a home, retire well. I want you to tell me if I can get there. They never said this, but they implicitly said this. I want you to take into account in your sophisticated plan that I live longer than men, which no Wall Street firm does, super important, and that my salary peaks sooner than a man's does. Really frustrating, super important. I don't want you to use the word standard deviation anywhere. So I want you to give me a plan. I want to be able to make trade-offs. And then I want you to put a fully customized investment plan behind it that will get me to my goals in the majority of markets. I don't care what happens when the euro outperforms the yen. What I want to know is, am I on track to start my business in 6 years? And if I go off track, what do I need to get back on? So we went out, we raised $19 million so far. The first round was from a bunch of Wall Street folks in my circle. The second round, which I'm super excited about, was from the most badass women I know. And so our headline recently was, FinTech firm raises convertible note. You naturally think, okay, dudes, I'm doing a FinTech firm, guys funding them. But instead what we had were women like Venus Williams, Melody Hobson, Karen Feinerman, Sonia Perkins, Teresa Gao, Jennifer Fonstadt. I could go on, Andrea Young. Badass females fund FinTech firm, conceived of by women, run by women, led by women, designed by women, to help women invest. Again, it's not about excluding the men, it's about including the women. And one thing I would leave you with is where I started, which is, for me, I just can't believe I've gotten to do the enormously cool things I've gotten to do. I can't believe I've had the experiences that I've been able to have. For me, it's about what impact I and we can have. And while you might think, that's great, really love that, this is good for all of us. If we can get women to unleash just some portion of the $5 trillion in investable assets into the markets, capital for companies to grow, more secure futures for them, it's good for our families, for society, economy. And the final thing that I would leave you with for the women in the audience, it's an interesting time to be a female. It's an interesting time to be a feminist. We've come very far. But it strikes me that until we are financially equal with men, we are not equal with men. And that's where Ellevest looks to help. Thank you.